gold could go as high as like $139,000 if we lost the reserve status. And if you have a $20 million bond that's due in 20 years, well, you owe 4,000 ounces of gold today at 5,000 ounces. At 139,000, it's like 110 ounces. So, does it have to happen right away? No. But will it happen if the treasuries are back and redeemable in gold? You bet your bottom dollar it will. How it happens, how fast it happens, how orderly it happens, those are all guesses. But let's see if Judy was right. If she is right, well, geez, then doing these podcasts come July 5th are going to be amazing. It certainly seems that way. I mean, first of all, in terms of debt, it's right out in front of us. They don't even care anymore. We'll just raise the debt ceiling or we'll dismiss what Doge said. And, they came up with $2 trillion. We'll do a couple $100 billion, which is 30 hours of spending by the U.S. government, some stupid number. The point of it is that they don't care much about debt until they have no choice to care about it. The fiscal irresponsibility is grotesque. They just continue to dig the hole deeper and deeper and deeper. And that's what gold is telling you. It's telling you that we're not rich. The U.S. is in any way. It's telling you that the debt has gotten so absurd that even Fort Knox barely registers against it, assuming the gold really is there. Fort Knox and the New York Fed and the Denver Mint and all of the places it's held that should be on the stockpile list. But that's the point. It's that if you're going to debase the currency, if you are going to bring back manufacturing and sell your products to the world, it has to be, according to Triffin's dilemma, abandon the world reserve currency, debase the dollar. You don't debase the dollar against the dollar index. You debase it against gold, which is the one neutral asset that is neutral against every other currency on the planet. You don't measure it against currencies that constantly devalue against your dollar. It's a melting ice cube that you're measuring it against. It doesn't work. It's not fair. It's not right. You measure it against gold. It's the barometer by which all currencies are measured, or all assets are measured, and it's been that way forever.
The United States government is officially trapped under a mountain of mathematically unpayable debt, and the financial elite are quietly preparing for the only remaining escape route. According to precious metals expert Andy Schectman, the United States is being forced to intentionally abandon its status as the world reserve currency in order to save the domestic economy. To rebuild the country's manufacturing base and wipe out the national debt, the government must aggressively debase the currency.
And, in everything we talk about, life is getting more expensive in the United States. Measure those things in dollars. And you will see that every asset you can think of is going down. It's deflating against gold. It's massively inflating against dollars. And that's the real measuring stick, not the dollar index. So yes, ultimately, and guys like Luke Groman, who I don't know if there's anyone smarter in this industry, talks about his belief, and which I agree with, would be a preferred organic growth, which we've seen. Of course, there's been a little bit of a pullback here and consolidation to balance out sentiment. You have to do that in bull markets. They're natural, they're healthy. We haven't seen a breaking of the trend. We're seeing higher highs. We're seeing consolidation, and then it goes up, but we see consolidation. That's fine. But it would be best if we could see gold much higher. A lot of the commercial banks are saying north of 6,000 very soon. I remember Luke saying he thought it would go 6,000, 7,000. I remember Jeffries, that used to be one of the primary distributors for the Mint, used to be Jeffries Beige. I think they're just Jeffries now. But they were saying, I think 6,500 was their number before it paused. But you see it get up to those numbers, and then you revalued it, which is an accounting gimmick. But yes, it would massively devalue the dollar, and it would revalue gold. It would give the Treasury a huge boost of income. Every $4,000 increase in the price of gold gives the Treasury general account free and clear $1 trillion based upon the number of ounces we have, which is an accounting gimmick. The Fed would print it and give it to the Treasury, debase the dollar even more. And as gold becomes more expensive in dollars, the currency is being devalued, period. It would do the same thing to other countries. It would benefit other countries too. So I don't know how much pushback you would get. And maybe that's why the majority of central banks hold gold on a balance sheet called the gold revaluation account. That is the name of it. And the majority of central banks around the world hold it in that name on their balance sheet. Do I think it will be revalued? I think the answer is yes. I think it will be organically revalued as much as possible. And if they have no choice but to revalue gold for national security, I could see them doing it, absolutely. When you showed me that, Michelle, because I publicly stated I thought gold would be revalued long before that came out. When you showed me that, I'm like, oh, great. I'm not so far off and saying stupid things that a lot of the stuff we've talked about today, there's no fact behind, well, there's fact behind a lot of it, but to take the next step and to make a statement like this is what I think, well, it is what I think. I don't know how this is all going to play out, but a lot of these things, it's logical. And a lot of the things I've talked about with you, BRICS and de-dollarization, I mean, they've all been a leap of faith backed by a progression of facts, but there's a gap between the facts and the outcome. You have to, either you're stupid enough or brave enough or just feel like you're supposed to say what you think, which I do, all of the above. Maybe I am stupid to say it, but I do think a lot of these things are happening right under our noses. And when Donald Trump Jr. wrote that, I'm like, wow, that's interesting. So maybe I wasn't so far off by saying it. And ultimately, I do think gold will go higher than anyone thinks possible. I think we are moving to, forever it was about keeping gold low because of Gibson's paradox and the inverse relationship between real interest rates to make the dollar and the bond market and all the Western currencies and bond markets seem strong. It may just flip-flop and go the other direction to debase the currency, to pay off debt, to back the bond market, to back the settlement system in the other parts of the world. Rising gold to me is guaranteed almost. Nothing is guaranteed, but highly probable. But it won't be easy. If it were easy, then everyone who's keen on accumulating it would be crowded out of their trade. And so I just think it will be a progression, slow progression. It's too dangerous to just go bang like that. So let it go up, and have some volatility. And then when we get up here, well, let's talk about revaluing it after everyone notices it, that it's already way up there. We'll revalue it, and it will be much easier than revaluing it from 2,500 or 3,000 or even 5,000. Let's let it get a little higher before that happens. I don't know if they'll revalue it then. I don't think you have to, because these treasuries that she would talk about are redeemable in gold, that Judy talks about, would be redeemable in gold at a future time. The price would be stipulated. You get $20 million worth of gold. Well, as Van Eck funds came out and said recently, Van Eck, not me, Van Eck said, they think gold could go as high as like $139,000 if we lost the reserve status. And if you have a $20 million bond that's due in 20 years, well, you owe 4,000 ounces of gold today at 5,000 ounces. At 139,000, it's like 110 ounces. So, does it have to happen right away? No. But will it happen if the treasuries are back and redeemable in gold? You bet your bottom dollar it will. How it happens, how fast it happens, how orderly it happens, those are all guesses. But let's see if Judy was right. If she is right, well, geez, then doing these podcasts come July 5th are going to be amazing. Yeah, that's what it would be. The gold that's been coming in, most of it, if not all of it, is coming in to the COMEX. Some of it leaves. Some of it stays in the eligible category, but this would be then refined bars, typically coming from London and Switzerland. But, if you look at the Venezuelan deal, it's gold doré that they're taking in that needs to be refined. Well, what if the U.S. refiners are too log-jammed? And in an effort to throw people off the trail on all of this, you're seeing gold go out as an export, but it would show up the same way, whether it was fully refined gold going to China for payment or it was gold doré going to Switzerland for refining, would show up the same way. And the imports continue every single month. Let me see if I have the March numbers here real quick. I bet I do. And again, this is just 1 month, but what we're seeing is the same thing every single month. So as far as what has come in so far in the month of March, and it's not over yet, we have seen, there's silver, where is gold? Here we go. As far as gold is concerned, in the month of March, sorry, don't mean to throw you off here. Here we go. COMEX gold deliveries. Total gold March deliveries so far, this would have been through yesterday, are up to 9,698 contracts, or 969,800 ounces have been delivered so far. And we saw 104,844 ounces shipped out. And I believe that was on Friday. Pretty sure about that. 104,844 ounces shipped out of COMEX. Well, where's it going? Who's taking possession of 105,000 ounces? But we're seeing the same thing month over month over month. There's still half a month left, and we've seen almost 1,000,000 ounces of silver delivered to COMEX so far this year. So, or this month rather, for March. But this has been the same thing we've seen every month. So it's still coming in. But what is going out into who is debatable. And is it coincidence that this is happening same time that we've worked out these deals with Venezuela? I don't know. It just seems kind of that way to me.
Growing use of the financial system as a political tool. Heavy sanctions, rising deficits, and large amounts of money creation are making some countries question the stability of the current system. As trust in paper currencies weakens, more governments and investors are looking for alternatives. Because of this, demand for physical gold and silver is increasing around the world. Some analysts believe this shift could create strong pressure on supply if more countries and investors try to secure real metal instead of paper assets tied to it.
To me, I mean, the depriving China part, which isn't really working out, is kind of the icing on the cake, so to speak. But the cake is, if I read it right, is that he doesn't care. I mean, he just came out and said, I'm going to take Cuba. Really, you take Cuba. He is, trying to get rid of the globalist environment and move to one of mercantilism, where everything is about protecting the United States first. And we've ignored mining, and we've ignored rare earths. We've ignored building refining capabilities and smelters. I mean, there's no coincidence that these are all being built. That these critical minerals are now open to everyone to see that we've now put a floor under the price in this Project Vault. We're going to accumulate it, and we're going to make a big deal about critical minerals. And then you look at the countries, I don't know what he's going to do with Canada, but Canada is bordered by 3 oceans. They have resources up the yin-yang in the ground in terms of lumber and gold and silver and oil. You look at of course, Venezuela. We talk a lot about all the natural resources they have. Greenland, the natural resources they have. I mean, it's almost like you said, the Monroe Doctrine. He's certainly a bull in a China shop, but you can see what he's after. And if I'm China and I say, look, we see what you guys are doing, and you need this stuff. You may be building your mining and refining capabilities, but you're a long way from being able to do that efficiently. So if you want our help, we've already restricted a lot of this stuff. We would like gold for it. Could it be that? Sure. Don't know. But either way, this is something that needs to be done, period. Whether you do it the way he's doing it, which is debatable, it's the right way, or not. You need to start to realize that critical minerals are critical for a reason. And if you want to project a strong military, and you need this stuff to rearm for weapons, and for everything else, not only do you need to secure the supply of it, but so much of, we talked recently about China limiting exports of refined silver. Well, they're responsible for refining about 70% of the world's doré silver. So again, we're looking at a situation where we have lapsed and focused too much on financial assets and not enough on the infrastructure, even the electrical grids, all the things that we need in this country, we've let lapse. And is that what he's trying to do? Make up for lost time, even doing it in a way that we wish we didn't have to do? Maybe. I mean, I think Occam's razor may say, yeah, that's really what it's about. Less about China, more about protecting the interests of this country. Even if you have to do it in a way that is distasteful, I think he would think it's probably the lesser of two evils in the long run.